Welcome to today's episode of Strategy Simplified. Today, we're breaking down our 2022 Consulting Salaries Report, the only originally sourced consulting compensation data available anywhere. Today, we'll discuss consulting salary trends, what they mean for the industry today, and what they mean for the industry moving forward. In short, if you're looking to break into consulting, this is a great time to do it. Let's dive in. 2021 brought us the tightest global labor market in decades, amidst one of the highest demand periods on record for management consulting services. The expected result was a rise in consulting-based salaries across the board. We were not disappointed. At both the pre-MBA and post-MBA entry levels, 2022 consulting salaries rose. When I say 2022 consulting salaries, I'm referring to consultants whose period of employment starts in 2022. This increase was noteworthy for two reasons. First, after the decade-long streak of consulting salary increases was halted last year, a new streak began after just 1 year. Second, salaries rose across firms and across levels. A rising tide really did seem to lift all boats. However, salaries did rise at a slower rate than the last major increase we saw in 2019. Firms did more than simply increase starting compensation to attract new talent. Many firms increased the total earning power of new consultants by increasing the maximum performance bonuses they could earn. In addition, benefits introduced by some firms 2 years ago have become more mainstream, including unlimited PTO, profit sharing, and more. In general, firms are either offering increased variable comp, higher performance bonus caps, increased profit sharing, and other variable compensation tools, or they're offering more attractive lifestyle perks like unlimited PTO. Why should you pay attention to this? The type of perks a firm offers reveal an interesting insight into the types of candidates they hope to attract, as well as their own market position. What else can this compensation data tell us? Well, the 2022 recruiting cycle also reignited the war for talent between consulting, Wall Street, and Silicon Valley. Big banks made the first move by increasing starting comp early in the cycle, and consulting firms had no choice but to follow suit soon after. Overall, as the risk of high fixed cost salaries decreased across each sector, consulting, finance, and tech, the salary growth for entry-level hires rebounded. While we did see salary growth in markets outside of the US, an outsized portion of the salary growth took place in the US market. Why? It's simple. The strong US demand for consulting services, in conjunction with the competitive US labor market, which is more competitive right now than labor markets outside the US, are the two main reasons why we saw faster salary growth in the US as opposed to other markets. As we look towards 2023 offers, we do predict that compensation growth will pick up outside of the US. Salary growth has traditionally been on a flatter curve in these markets, and the rebound should follow the same pattern. In addition, despite industry consolidation, we expect that firms will begin to hit the upper limits of their pricing power within the next decade as the competition between established players grows ever fiercer. This, in addition to max utilization rates, may spur firms to begin to prioritize cheaper pre-MBA hires as opposed to more expensive post-MBA ones. We don't expect to see this in the immediate future, but we do expect this to be a trend that plays out over the next 10 to 15 years. Already, though, consulting firms are looking outside of traditional recruiting hotbeds to maintain the hiring pace amid their continued need for additional talent. Specifically, this year saw a spike in the number of off-cycle experienced candidate hires and non-target hires. Case in point, fresh MBA graduates made up only 19% of McKinsey's annual intake, and the firm hired analysts from over 370 universities. We expect a continued increase over the next year in the number of experienced candidates and non-target students who receive consulting offers. In short, it's never been a better time to break into the industry, no matter your background. We also saw disruption of a different kind this past year. It was a record year for M&A activity across the management consulting landscape. I've already mentioned and referenced the increased industry consolidation we're seeing. We identified two patterns in the flurry. First, large firms acquired boutique strategy houses instead of organically building their own strategy practices. An example of this, Alex Partners acquiring Galt & Company. Furthermore, traditional strategy firms acquired specialist players across cloud services, supply chain, sustainability, and a myriad of other sectors. Why? They want to continue to move further into offering downstream work. A prime example of this, McKinsey acquiring European-based sustainability firm Material Economics. We expect these trends to continue to play out over the next year. Overall, the management consulting industry has never been stronger. This last year, as global economies roared back to life, the industry posted double-digit growth, driven largely by increased technology, strategy and operations, and supply chain work. However, while all may seem calm and rosy above the surface, the picture changes when you look a little bit deeper. This growth was driven by a small core of established players. While the number of market entrants increased in 2021 compared to 2020, M&A activity, coupled with a shuttering of some boutique firms during the pandemic, mean that there's less overall competition in the consulting market than there was 5 years ago. Still, management consulting remains an essential service for big business. Over the last year, consulting firms were called upon to help companies drive top-line growth, digitize operations, mitigate supply chain issues, and more. In addition, governments around the world continue to rely on consulting firms to develop economic development and vaccine distribution plans. Due to these factors and more, we at Management Consulted remain as bullish as ever on the industry at large and expect continued strong growth this upcoming year. We'll be right back after this short break.
Are you looking to land a job at the top consulting firms in the world? Then you need to be prepared for the toughest interview you'll ever face, the case interview. Preparing for case interviews is no easy task. It requires focus, diligence, and a lot of preparation. Enter Black Belt. In Black Belt, you'll work with our team of former McKinsey, Bain, and BCG coaches to help you prepare for the case interview. Over 8 or more one-on-one sessions, a coach will work with you one-on-one to first diagnose your strengths and weaknesses, build a prep plan with you, and then guide you to case proficiency through mock sessions and assigned homework to complete in between sessions. Black Belt is an all-in-one program that has helped hundreds of candidates land offers at the top firms in the world. Check out our Black Belt offerings via the link in the show notes.
What does all this mean for you, though, and the future of the consulting industry? Well, we draw 5 main conclusions from our 2022 consulting salary data. These conclusions are drawn from the basis that while staff compensation rose, project rates at consulting firms stayed relatively flat. Here's conclusion number 1. The comp gap between the top firms and everyone else is widening. While most firms were able to offer increased base salaries this year, the top firms, who drive that outsized industry growth, were able to offer dramatically higher variable compensation, along with more generous benefits and less travel. With more attractive comp and lifestyle perks, there may be less reasons than ever for top candidates to choose smaller firms. Conclusion number 2. Firms responded to strong market demand for their services by luring talent with meaningful increases in starting comp packages compared to last year. While this was partly to keep pace with big tech and finance, it was also to keep pace with Fortune 1000 internal strategy practices, who, after a hiring hiatus last year, again began poaching top recruits from consulting for the 2022 cycle. Conclusion number 3. Consulting firms are continuing to differentiate using comp packages as a tool. More generous profit-sharing plans and unlimited PTO are becoming more widespread, and the firms who offer these benefits have a decided advantage over those who don't. Conclusion number 4. Consulting margins are at risk. As project rates stay steady, despite the increase in industry consolidation, and as salaries rise, firms risk lower margins in the years ahead. If they can't wield pricing power or continue to optimize fixed costs, we expect that firms may transition to staffing smaller teams on each project in the years ahead. Conclusion number 5. Burnout is rising. As consultant utilization continues to increase, consultant burnout is also increasing. Anecdotally, we saw more exits from the industry this last year than in any other year since 2008. In conclusion, there are no signs that this competitive labor market will cool down this year. As a result, consulting firms who can add value beyond pure compensation will continue to stand out. As a candidate, this has never been a better time to break into consulting. Thanks for listening to this week's episode of Strategy Simplified. As always, if you enjoyed the episode, leave us a rating or review on Spotify or Apple Podcasts. Want to read the full consulting salary report? Click the link in the show notes to download your copy today. We'll see you next week.